a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We are going to take a look now at some of the cheapest ETFs for the most popular stock indexes with our ETF research director, Nina Mishra. So we're talking then about the Dow, S&P 500, and the Nasdaq indexes?
Yes. So these are the three most popular, most widely followed stock market indexes, and they are kind of barometer of the stock market and the economy too. There's a lot of ETFs and mutual funds that are indexed to, that follow these indexes. Because those ETFs provide, exposure to the entire market, almost the entire market in a single instrument, a very cheap, convenient, diversified exposure to the entire market represented by these indexes. But these indexes are very, very different from one another. So I thought maybe take a look at each of these indexes and also the best ETFs to follow those indexes.
Makes sense. So we're starting with what?
We are starting with the S&P 500. This is the most popular index. A lot of ETFs and mutual funds follow this index. In fact, there's about $3.4 trillion of index assets associated with this index. It's a market cap weighted index, and this is the most wide index representing 500 largest companies in the US market, and it covers about 80% of the market capitalization.
Okay.
The Dow is a price weighted index. It follows 30 blue chip stocks, and I think it is the most inefficient stock index.
I don't know why they still quote it, to be honest with you.
Exactly. So this is the oldest. This made its debut when there was not much computing power. So that is why they selected those 30 blue chips, because it was just easier to calculate back then. But it is still being followed. NASDAQ is one of the hottest, sexiest index. I would say people love those companies, most innovative companies. And in fact, most people think that this is a technology index. It is actually non-financial stocks that trade on the NASDAQ, the 100 non-financial stocks. And it follows a slightly modified market cap weighted methodology with slight caps here and there.
Because there are some big companies on the NASDAQ that are non-technology stocks.
Yes, there are.
Amgen, Starbucks, Tesla, companies like that.
Many of them.
Yeah. All right, so let's take a look at these examples that you've brought. Vanguard S&P 500 ETF.
So the most popular S&P 500 ETF is, of course, SPY, the Spider S&P 500 ETF, which is the oldest, most popular, most liquid ETF in the world. And traders love that because of its extreme liquidity. But SPY charges 9 basis points. This ETF, also very liquid, very popular, great for buy and hold investors. If you're not trading several times in a day, this is the ETF for you. It charges this 3 basis points, which is $3 for every $10,000 invested. It has $122 billion in assets. It holds 500 leading US companies. Now, if you want to learn more about this ETF and the index, of course, S&P 500 index, you can go to the quote page on Zacks.com. It has a nice dividend yield of 1.94%. Now, with treasury yields plunging, I think many income-oriented investors are also looking at stocks that pay dividend, and 2% dividend is not bad. You can go to the external home page, Vanguard, to learn more about this ETF. Now, information technology is the largest sector, 22%. Communication services, which is a new sector which was created last year. It is heavily concentrated in the likes of Facebook, Google, and Netflix. That is the second largest sector. And then consumer discretionary. Microsoft, Apple, Amazon, Alphabet, Facebook. These are the top holdings, which is not surprising since it is a market cap weighted index.
All right. And then there's a spider for the Dow Jones Industrial Average.
So the ticker is DIA. So as I mentioned, it holds 30 US blue chip companies. The selection is also a bit arbitrary because these are selected by the editors of the Wall Street Journal.
Yeah.
Now because it is a price-weighted index, it excludes very high-priced stocks which are more than $1,000, like Amazon and Google. You will not see those stocks in this index and ETF, because if they include those stocks, they will create a lot of problems in the portfolio because of the price weighting.
Mm-hmm.
So that is why I say that it's an inefficient index, and we will learn more about the inefficiency. 17 basis points, still quite popular with 22 billion in assets under management. Now, to look at holdings and other details for this ETF, slightly higher dividend yield to 2.14%, because it holds a lot of technology, financial stocks in greater proportion than S&P 500 index. You can also go to the external home page. Now look at the top holdings, so different from S&P 500.
Yes.
Boeing, being the priciest company,
Mm-hmm.
Home Depot, United Health, Apple, McDonald's. Now Boeing has a market cap of about 217 billion, and it has almost 10% representation in the index. In fact, earlier it had even a larger representation. With all the Boeing's problem, the representation has come down slightly. And the world's most valuable company, Microsoft, which has over $1 trillion market capitalization, it is not even in the top 10 holdings.
Right.
Apple and Amazon are not there at all because they are over $1,000 stocks. So that is why it is not a good representation of the stock market. Now looking at the sector exposure, industrials and then information technology, a good representation to financials as well, and then consumer discretionary. Now the Dow outperforms, of course, when sectors like industrials and financials do better. So there are times when the Dow has outperformed the S&P 500 index.
Okay. And back when the Dow was created, to be fair, these were the companies
Exactly.
that were felt to most widely
Blue chips.
represent
Yes,
the economy
exactly.
at the time.
But
That's changed.
But the economy has changed and the market has also changed.
Right.
So that is why it does not represent the market now.
Yep. All right. Then there's Invesco QQQ.
Okay, so QQQ is very popular. It is the most traded ETF after SPY. Traders love it because of its extreme liquidity, and it holds many innovative companies which investors and traders love. It holds 100 largest non-financial companies listed on the Nasdaq exchange. It is concentrated in technology and communication services, 20 basis points in expense ratio, and very popular with 76 billion in assets under management. Now, to learn more about the index and the ETF, you can go to the code page, and from there you can go to Invesco's web page. You will notice that dividend yield is much lower because many technology companies, and particularly communication services companies, Facebook, Google, those do not pay a dividend. So that is why the dividend yield, you'll get a much lower dividend yield with this ETF. Now looking at the top holdings, let's first take a look at the sector exposure. 46% to information technology, and then 22% to communication services, and 16% to consumer discretionary. So that is why this ETF and the index will outperform when the investors favor growth stocks. Whenever there is a lot of uncertainty in the market and investors favor more defensive sectors, then this index and the ETF will tend to underperform SPY. Looking at the holdings, Microsoft, Apple, Amazon, Facebook, and Alphabet.
Okay, now we need to compare them.
Yes. Now, see, these are very popular indexes and ETFs, and as I mentioned earlier, these are basically very suitable for core holdings in one's portfolio. So these are basically buy and forget or buy and hold forever ETFs. So that is why I have a 10-year price chart over here, 10-year returns. Now, we know that technology companies have done very well in this bull market. So that is why QQQ has significantly outperformed SPY, S&P 500, and the Dow Jones index. It has returned almost double that of the other two indexes.
And that's 10 years. What's this time period?
So on this, I have the year-to-date chart, and technology continues to be the best performing sector this year as well. 24%, little over 24%, whereas the S&P 500 index is up about 21%, and the Dow Jones is up about 18% this year so far.
And do you own either of these?
I do own QQQ.
Okay.
In my personal portfolio.
All right. Well, thank you for that. Don't forget, always more ETF information. It's on our website, Zacks.com. It's in the ETF section. Use the Funds tab in the top toolbar on the home page to get you there. Also, don't forget about Nina's weekly podcast she calls ETF Spotlight. A lot more information there of a wide variety. I think you should give it a listen if you want to learn more about stuff, especially stuff in the ETF realm that we don't have time to discuss here on video. That's in the podcast section of our site. Go to the homepage again, all the way down to the bottom, click on the word podcast, and it will help guide you to that section. With Nina, I'm Terry Ruffalo.